This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on Friday, April the 10th, 2015. Our time is 8:48 Mountain. Radio show runs on 630 CHED in Edmonton. We also have the show, if you ever miss it, streaming live on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find our podcast there. We are portable. We go anywhere you do. Connect with Harold via his two websites, rarecoloreddiamonds.com. You can call him at 1-800-432-1022. Also, hsfineauctions.com. And some big news coming up this week. An Argyle pink diamond necklace and ring valued at $890,000 was sold by Rare Colored Diamonds. Rare Colored Diamonds and Diamante Atelier announced the recent sale of two one-of-a-kind jewelry pieces, one necklace and one ring, with a combined value of $890,000 to a private buyer. We will talk more about that later in the show. Our featured diamond of the week from rarecoloreddiamonds.com is a 1.19 carat cushion cut, fancy, vivid, orange, yellow, internally flawless. It is absolutely stunning. You can see it at rarecoloreddiamonds.com, featured diamond of the week. If you get our free weekly newsletter, we have a picture of it in the newsletter. If you'd like to get the newsletter, the companion to our radio show, connect with Harold at rarecoloreddiamonds.com or call 1-800-432-1022. We will be happy to send it out to you. In the news this week, the Swiss government became the first ever to issue a 10-year bond with a negative yield. You will get paid nothing for 10 years. Greece did make a payment to the IMF, but they are still negotiating a bailout they really don't want. Also, bank deposits no longer guaranteed in Austria. That's right, the Austrian government saying, no, we're not going to have a guarantee anymore. The U.S. debt ceiling is stuck at $18 trillion. That has been going on for over 25 days. The ceiling has not been raised, and there's really no word on when they're going to do it. Eventually, they'll have to. U.S. jobs, that number came out last Friday. We were off due to Good Friday. Very poor number in the United States. They gained 126,000 jobs. The estimate was 245, and it just goes to show how weak the U.S. economy is. Americans not in the workforce, 93.2 million, a stunning number. Also, 56 million women not in the workforce. Recent poll came out. Half of Americans avoid the stock market. 53% don't have the money. 21% don't trust stockbrokers or financial advisors. And it's not a surprise when you see what happens on Wall Street with all the skullduggery. But the big news of the week, Argyle pink diamond necklace and ring valued at $890,000, sold by Rare Colored Diamonds. Congratulations, Harold Siegel.
Well, thank you very, very much, Randy. It was great sale, and I'm very happy it came out in a press release. You know, what you talked about this morning is so alarming. It's almost laughable. First of all, who would invest in bonds with a negative yield? Why would anybody do that? And why would anybody keep their money in a bank that has no insurance to it? So, again, if this is the way that things are going and this is the way the banking system and everything is going to go moving forward, it's going to create a huge problem. How do you continue to live and do business if you cannot trust the bank in any way? If the banks all of a sudden don't have insurance, back in 2008, if you remember what happened, there was $100,000 worth of insurance on U.S. bank accounts. They had to raise it to $250,000, otherwise there would have been a run on all the money market funds, and everybody would have taken the money out of the bank. So I would imagine that that's what's going to happen in Europe if that's the protocol that they're actually going to go with. So makes absolutely no sense to me whatsoever. But then again, everything that's happening in the world financial systems right now are so suspect. Nobody can really trust any of the governments, the banks, the brokerage firms, anything. Everybody's manipulating, looking out for themselves, and it just appears it's the general public, the small investor, that always gets hurt. That's why we say stay away from those type of assets. This week was a down week primarily for gold. In fact, Monday the market was up strong, but Tuesday, Wednesday, and Thursday the market fell back, and a lot of it was to do with the fact that the U.S. dollar was gaining strength again. The U.S. dollar and gold are directly tied into each other. The stronger the U.S. dollar goes, the weaker gold is. That's always been the way it's been. When we first started recommending gold back in 2000, because the U.S. dollar was so strong at that particular point, gold was only at $250, and the U.S. dollar was one of the strongest currencies. What happened over the next 15 years was that the U.S. dollar started to drop substantially. In actual fact, it went from the strongest currency to one of the weakest currencies. And it was actually in 2011 when gold hit its high of $1,920, and that's when the U.S. dollar hit its low of 72.5 cents. So there's a direct correlation between gold and the U.S. dollar. Now let's move forward from 2011 to 2015. The U.S. dollar started to strengthen for various reasons, and the gold market started to fall off. So it reached its high in 2011 when the U.S. dollar was at its lowest point of 72.5 cents, and gold hit 1920. Now, fast forward 3 years further, and gold is down to 1,200, and the U.S. dollar is almost at par. It's almost up to 100. It's actually gone up from 72.5 cents to 99.21 that is trading at this morning. Now, we've seen this happen before. A few weeks ago, we saw the U.S. dollar almost get to par, which is at $1. Right now, it's at 99 cents, 0.21. So every time we get close to to the U.S. dollar at par, there's resistance there. It needs to be able to break through them, and I believe that's going to happen next week. So we will see the U.S. dollar not only break par, but probably go to the 103, 104, and maybe even the 105 level. That will push other currencies lower, and that's why I've been saying it's not that I'm not bullish on gold. I am long-term bullish on gold, very bullish on gold. Short-term, gold has got to go lower because of the relationship to the U.S. dollar. So once the U.S. dollar does break par, which will probably happen next week, and we get another rally in the U.S. dollar, it's going to push gold lower. It could push it to 1,100, where there's very heavy support. It could push it to 1,000. I don't have a problem with either one of those two numbers as long as you're not leveraged. If you own your gold outright like you should, you have no problems with these pullbacks in the market. They're buying opportunities. It's not that gold is in a bearish stance. It's in a bearish stance because of the way that Wall Street views it, but we know that they made that happen. They manipulated the price of gold from 1,900 down to 11 and change, and they did that by raising the margin requirements, making it so expensive to trade gold. It had nothing to do with the fundamentals. The fundamentals for gold are still there. The reason you buy gold is primarily because of long-term inflation, currency devaluations, and overall problems with the world economy, and we have all of those situations happening now. You know, they say that there's really no inflation, but all you have to do is go to the grocery store. And I think it was just 2 weeks ago that Randy had a major article in our newsletter that talked that beef was at the highest level of history. So, again, there's a lot of things going on that we have to be concerned about. But, again, who in the world would buy bonds on a 10-year basis if you're going to actually be negative at the end of the 10 years? What would be the point of doing that? It makes no sense whatsoever. It actually makes no sense why people would actually put their money in a bank that isn't guaranteed, because we know that these banks have got out of business before. So again, it's a sign of the times. There's a lot of things coming forward that are going to be head scratchers. We're going to sit back and say, how in the world is this happening, and why would anybody put their money that way? We don't. We're extremely conservative here. We don't leverage. We don't take unnecessary risks. We don't speculate. These are the worst times to do those type of things. The smartest things to do right now are to own your assets outright. Diamonds are a tremendous investment. They're doing phenomenally well, and they could be sold in other currencies. Gold has held in there very strong. Don't forget, silver went from 50 down to around $12, $12.50. So it actually fell by over 30%, almost 40. By 3/4 actually, and gold has dropped less than 50%. So there's a lot more strength in gold than there is in silver at this point. And I'm not saying that silver's not going to go higher. Silver will go tremendously higher. There seems to be a lot of difficulty with silver getting above that $50 level, because in 1980, when we hit record prices in gold and silver, gold hit $850 and silver hit $52. On this last rally that brought gold from $250 all the way up to $1,900. So again, it far surpassed the highs that we saw in 1980. Silver didn't do that. Silver went from $4.50 up to $50, which was a tremendous move, but it actually should have gone to over $100. So it's really the exchanges that thwarted the move in gold and silver. And again, I think that this next rally that we will see in metals is going to be extreme, and it's going to be historic. I believe the gold will not only break the 1900, 2000 level, but I think that the problems with the world economy is so severe that it would not shock me to see gold closer to $3,000, $4,000, $5,000. We are almost there with our gold investment. We actually got delivery of one of our kilo bars, which is 2.2 pounds of pure gold, and it was the most beautiful thing that I have ever laid my eyes on. I held it in my hand. It was magnificent. Came from our refineries. The original gold came from South Africa. We have full approval from the South African government now to export gold from there, and we're pretty well finished with the U.S. government as far as getting through with Homeland Security and everything, as far as being able to get a license to sell physical gold in North America. So I'd say we're probably 2 weeks away from that, but again, we're not 100% ready to buy it in the market anyways. I think gold is going a little bit lower before it goes higher. The newsletter this week is phenomenal. You should definitely get it. It's a free newsletter, but it's loaded with information. And one of the things that is important that you read about, which is what's happening all over the world at this point, and it's extremely important to read what J.P. Morgan's James Dimon is saying. He's warning that the next crisis will be even more volatile than the one we saw back in 2008. He says, you ain't seen nothing yet. When it comes to market wreckage from a financial crisis, according to J.P. Morgan's boss, Jamie Dimon, in his annual letter to shareholders, the bank's chief executive warned there will be another crisis and the market reaction could be even more volatile because regulations are now tougher. It's in the newsletter. You got to read it. If you have money in the stock market, you really got to understand at this point that it's one of the riskiest investments you could make, and you probably want to lighten up on that or hedge it or get out of it and go on the sidelines, because if J.P. Morgan, the greediest of all corporations and banks, is telling their shareholders that this next crisis is going to be worse than 2008. I don't know how it could have been worse than 2008. 2008, the entire financial system as we know it almost crumbled if certain things weren't done at that particular point. It led to a lot of manipulation in the markets, a lot of skullduggery, a lot of underhanded things, but they did right the ship for a period of time. But what they've done to the market is unconscionable. What they've done as far as manipulation, and when you do this to a marketplace, the market is always going to come back. The fundamentals will always come back to this market, and we're going to see the next downward move in the Dow come down to probably below 8,000. In actual fact, according to my calculations right now, the Dow should not be sitting at 18,000. It should be sitting at about 10 or 11,000. So again, it's a very, very risky time to be speculating in any market, to be leveraged in any way. You should own your gold and silver outright. Do not finance it. Do not do anything but hold on to it yourself. Again, we're going to come into some very, very volatile and difficult times, and the markets that we recommend the strongest are gold, diamonds, and cash. That's where all the safety is going to be and where all the money is going to be made. So again, Randy, I'm just shocked by what's happening in the world markets right now. And what you read at the beginning of the show is just a head scratcher. How in the world do they offer bonds that you're going to be negative on, and who would put their money in a bank account where it's not guaranteed? Again, if this is what's coming forward, it's going to be a very rocky road for most investors.
And the truth is, I really encourage people to get our free weekly newsletter, Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Read those stories. The Swiss government, first ever to issue a 10-year bond, negative yield. It's a stunning fact. Not only that, though, the bank deposit situation in Austria. And really, if you look at bank deposits, we have the CDIC, United States has the FDIC, and if there was a catastrophe, they don't have the money to cover off all the losses. It's a false sense of security. That's why we advocate having an insurance policy in your portfolio. That insurance policy, hard assets, diamonds, gold, silver. Diamonds, gold, and silver. Speak with Harold Siegel about investing in hard assets. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022 to speak personally and privately with Harold about investing in hard assets. And some of the top stories we have in our newsletter are a must-read. In our quotes and quick hit section, we have a quote from Richard Russell, and he says, "The latest data suggests that the U.S. economy is much weaker than thought. The weakness suggests that it could be quite a while before the Fed raises rates. With short rates staying at zero as far as the eye can see, the situation is now bullish for gold." He also says it now appears increasingly certain that the United States is still grappling with the Great Recession. Not only will the Fed leave rates at zero, but I would not be surprised if the Fed ushers in QE4. With Europe's central banks following the Fed and turning to quantitative easing, it's entirely possible that with the new trillions in currency units, the world will soon be dealing with hyperinflation. Thus, central banks are sending the currencies of the world to increasingly lower levels. The protection against currency wars is tangible assets, tangible items. Leading the list of possible tangible items, silver and gold. And obviously, we advocate diamonds. Michael Pinto interviewed, and a quote from that interview this week in our newsletter is, "The entire global economy sits mired in a lost decade. It's becoming clear quantitative easing failed to do anything but reinflate old asset bubbles. But it's even much worse. It has created a massive new bubble in the global debt market. When this bubble bursts, it will cause a worldwide depression. That is a terrible price to pay in order to provide the illusion of unsustainable and anemic economic growth, and to further the distance between the average worker and the richest 1% on the planet. The middle classes are quickly losing faith in governments and central bankers to provide sustainable growth. Asset bubble creation and the destruction of living standards is what they have achieved." Egon von Greyer is saying, "I believe that the temporary dollar rise we have seen is now reversing, and that the dollar will start a major and sustained fall. This, of course, the mirror image of gold and silver, which will soon start a historic rise as they resume their climb to new all-time highs. This uptrend has already started in most other currencies except the dollar. But gold and silver will now also go up against the dollar. Stock markets will also start a major secular bear trend. These massive changes in the markets and the trends will be triggered by a catalyst. With the current state of the world economy, there is abundance of potential catalysts or black swans, whether it's economic, financial, or geopolitical. The key thing is that investors must be prepared ahead of the coming global financial destruction." And Harold touched on it, and it's a very good point. Jamie Dimon from Jamie Dimon, obviously the head of J.P. Morgan, coming out and warning the next crisis will bring even more volatility. Mohammed Al-Arian was interviewed, and he has most of his money in cash. He used to head up PIMCO, and he says there's a massive gap right now between asset prices and fundamentals. You can read that interview in our free weekly newsletter. And as well, hedge fund legend Julian Robertson warns of a complete explosion unless the Fed contains the boiling bubble market. And he's a legend. You see him on CNBC from time to time, but he spoke with Fox Business News' Maria Bartiromo, who left CNBC to join Fox, and he said he is hardly bullish, which may explain his absence from CNBC, because we all know them as people that really cheerlead the stock market. But you have major figures, Jamie Dimon coming out saying that we will see even more volatility. There will be another financial crisis of some sort. That is just the nature of the financial markets. Mohamed Al-Arian coming out saying that he has most of his money in cash, and Julian Robertson coming out and saying, we could have a complete explosion. And a lot of it is based on, Harold, and we have about 2 minutes left, if the Fed does raise interest rates, and we have all these derivatives out there, as we spoke about on a past show, it could be a ticking time bomb that goes off and sends the markets down in a complete spiral.
Well, it certainly could happen. Again, at this point, I'm not sure that I agree with Von Dreyer at this particular point, because when you look at the strength of the U.S. dollar, it's not so much that the U.S. economy is doing better, it's doing better than other countries' currencies are. So basically, in order for the U.S. dollar to fall, some other currency is going to have to be substantially stronger than the U.S. dollar, and there isn't anything at this point. You've got in Europe, they've got huge trouble. So the euro certainly is sitting right now at 106. That's not a factor. And the only currency that's really stronger than the U.S. dollar right now is the British pound, and that's come down a bit. The Canadian dollar is down 25% because it's hooked into the price of oil, and oil's been dropping. So, again, at this particular point, over the short term at least, I don't see that the U.S. dollar is going to fall, especially to the level that they think it's going to. But eventually that will happen as other currencies start to strengthen due to their economies getting better. But right now the whole world's in a mess, and it's much more important to look at what's going to happen, in other areas, especially with oil, to see really what's going to happen moving forward, because oil right now is taking away most countries' wealth, and that's why they're having such an issue with their currencies.
Interesting note from Bill Kerrigan. He's a technical analyst, Getting Technical Info Services. He was on the Canadian Business Channel, brought up an interesting point. The Dow Jones Industrial Average is no longer industrial. Back in 1984, the Dow had 18 industrial components and only 6 consumer-related components. Today, the Dow has only 6 industrial components, and the consumer-related components has doubled to 12. This makes the current Dow behave like a spider consumer discretionary sector, which is very interest rate sensitive. The old Dow was economic sensitive. So if rates go up, we could see the Dow take a hit. RareColoredDiamonds.com. Connect with Harold at RareColoredDiamonds.com to invest in hard assets, diamonds, gold, and silver. Speak with him personally, privately, 1-800-432-1022. We're going to come back and bring you some breaking news regarding RareColoredDiamonds.com as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. It's April the 10th of Friday, 2015. Our time is 9:14 Mountain. Radio show runs on 630 CHED in Edmonton. And you have two choices. If you ever miss a radio show, you can catch us streaming live on Harold's websites, HESradio.com, RareColoredDiamonds.com, and we have a podcast through iTunes. All you need to do is have iTunes on your portable device, type in the World Financial Report on Radio, and our podcast is right there. You can subscribe to it. It will come in automatically every week. You can listen to it at your leisure. Harold's websites, RareColoredDiamonds.com, telephone number 1-800-432-1022. He also has an auction site, HSFineAuctions.com. And we'll talk more about RareColoredDiamonds.com. Our featured diamond of the week is a 1.19 carat cushion cut, fancy vivid, orange, yellow, internally flawless. This is a stunningly beautiful diamond. You can see it online or in our free weekly newsletter. And I should mention that, and we'll get to this in a little bit. Sotheby's had a magnificent jewels and jadeite sale on April the 6th, 2015, Hong Kong, China. And lot 1861 was a fine, fancy, intense blue diamond, pink diamond, and diamond ring. Now, the estimate on it was around $1.1 million. It ended up going for right around $1.4 million. We have more auction results for you a little later in the show, but our big breaking news, an Argyle pink diamond necklace and ring valued at $890,000 was sold by Rare Colored Diamonds and Diamante Atelier announced the recent sale of two one-of-a-kind jewelry pieces, one necklace and one ring, with a combined value of $890,000 to a private buyer. The necklace featured 909 princess-cut Argyle pink diamonds totaling 34.81 carats and 183 princess-cut white diamonds totaling 5.27 carats, set in 18-carat rose gold. The total carat weight, TCW, is 40.08, and the gold weighed 94.92 grams. Harold, two stunning pieces sold by rarecoloreddiamonds.com. Congratulations. Obviously, someone has made themselves a very wise investment.
Thank you very much, Randy. It was great, and the media picked up on it. It's a one-of-a-kind necklace. You could never replace it because there's no way that you can get those type of diamonds out of Argyle anymore. So, we sold it at an excellent price to the client. He's a big real estate investor. He believes diamonds are real estate in your pocket, and he came in from California with his wife. They came to our private showroom on Worth Avenue in Palm Beach, and it was a great time with them. In actual fact, he's a brilliant real estate investor, and we may be doing some seminars together on real estate and diamonds within the very near future. As magnificent as the necklace is, and again, it's a one-of-a-kind, could never, ever be replicated again because, again, we know the Argyle mine is closing and there's no way in the world that those diamonds exist anymore. But the ring was equally as impressive. The ring is a vivid pink Argyle, and it was set in a magnificent setting. It's a museum-quality piece, and we all know what's happening with vivid pink Argyles. They go up more than any other asset that there is. It's safe, and we know that the Argyle mine is going to close in less than 5 years. So between the two pieces, he did extremely well, and he actually is looking forward to one day selling it through our secondary market, which is a Seagull Fine Auction. So who knows, we may show up in Edmonton together with the client who owns these beautiful pieces because he is a brilliant real estate investor, and we may be able to present some phenomenal opportunities to our Canadian clients. So all in all, it was amazing. As far as the featured diamond goes, the featured diamond is a one-of-a-kind. You'll never see another diamond like this because in order for a diamond to turn yellow or orange, there has to be nitrogen in the ground. And this diamond is both that. It's vivid in color, which means it has the highest saturation, but it's orange and yellow. It's not orangey yellow or yellowish orange. They're both very strong, dominant colors in this particular diamond, and it's a big, big diamond, especially for a diamond that has orange in it. So it's over a carat. It's a 119. It's a cushion cut, so it looks very, very large. It looks like it's 2 carats, but the color will simply take your breath away. There's not another diamond in existence that looks as beautiful in this color range as this particular diamond does. So just absolutely ecstatic about what's happening in the diamond business, especially with how risky all of the other markets are at this point. So it really doesn't matter what the name of the investment is. It's what's going to give you the biggest return with the least amount of risk, and that's why we brought diamonds to you back over a decade ago, and it's turned out to be just a phenomenal investment for my clients.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, and definitely go to the website and take a look at our featured diamond, 1.19 carat, cushion cut, fancy, vivid, orange, yellow, internally flawless. And we had Sotheby's magnificent jewels and jadeite sale during the week. And I mentioned the first lot, 1861. It was a fine, fancy, intense blue, pink diamond and diamond ring. Absolutely stunning. The estimate on it was $1.1 million, sold for $1.4. And we'll go through a few of the others. There was one in particular that I think really stood out for me, Harold, because it's something that you have had a lot of our investors invest in, and that is pink diamonds. Lot 1827, fancy pink diamond and diamond ring. The estimate on it was $64,000. It sold for $161,000. Obviously, that is well within the wheelhouse of what we've talked about on our show for quite some time. Also, lot 1643, fancy light pink diamond and diamond ring. The estimate on it was $87,000. It sold for $145,000. There was lot 1826, a fancy yellow-green diamond, pink diamond, and diamond ring. The estimate on it, $58,000. It sold for $129,000. There was also lot 1856, a pair of yellow diamond and diamond pendant earrings. The estimate on it, $90,000, went for $109,000. And Harold, we have a whole list here of auction results from Sotheby's magnificent jewels and jadeite sale of earlier in the week. And we will be happy to send it out to all our radio listeners today and all those people that have invested in diamonds through rarecoloreddiamonds.com to give them an idea of what they're selling for at auction. Obviously, we are holding on to our diamonds. We believe the best is yet to come, but you can see, Harold, the average person is probably spending $50,000 to $100,000 on a diamond, and you're seeing very nice prices for those being realized at auction.
You bet. It's very impressive, very, very impressive, especially with the tight world economy right now. People are obviously understanding the importance of owning these type of assets. And again, the proof is in the pudding. Just look at the auction results, and they're fantastic. Most of the diamonds sold at higher than the estimates, and that's exactly what we wanted to see. Again, a lot of these yellows are not flawless diamonds. In fact, 99% of them are not. But even a 581 fancy yellow diamond ring that was estimated to sell at $64,000 sold for over $80,000. Those are beautiful returns. The beautiful thing is that you get to enjoy wearing these magnificent pieces and then give them back to sell them. And with us, we only take 10% of the profit. So if you don't make money, we don't make any money. So we think we know our business well enough to realize that if you hold on to these assets over the longer term, which is what you have to do, these are not short-term investments. You don't buy a diamond and sell it in 2 or 3 years. You're just not going to make any big money on it. You want to hold these diamonds for 10 years or longer, and that's where the biggest money is made. A diamond that I bought back in 2003, a 2-carat vivid purplish pink argyle, sold for $350,000. Back then, that diamond is worth almost $3 million now. So those are the type of returns that you can see when you hold on to these for longer periods of time. Now, I've got 4 young grandchildren. I put away diamonds for all of them. They've got them put away in their portfolio. They have no idea that they own them. But in 25 years from now, when they're ready to get out into the world, they have an asset that we know is worth an awful lot of money. That's why I would prefer to give them diamonds than give them any type of stock certificates or anything like that, because who knows what's going to happen with stocks. We know that our Canadian clients in the RSPs haven't made money for 10 years. But put that money into a diamond, and you'd see a much, much bigger return. So, again, we're in love with what's happening in the diamond market. To give an indication as to how important diamonds are is the currency. Now, we've always said that one of the major reasons, aside from appreciation, capital appreciation, basically making money on diamonds over the long term, one of the major reasons for owning them is inflation and currency devaluation. Now, very few currencies have devalued more than the Canadian dollar over the last year. And in actual fact, forget about any increase in the price of a diamond. If you bought diamonds last year, when the Canadian and the U.S. dollar were even, and today, without any appreciation in the diamond whatsoever, you made 25% just on the currency alone. That's what I've been saying to you for the last 10 years. That's how important it is to own diamonds, because currencies are going to change from time to time. Look what's happened, to the Iranian currency, the Venezuelan currency, the Russian currency, all these currencies, and the Canadian dollar and the Australian dollar. They've all plummeted due to different situations. With Canada, it had more to do with the fact that oil prices dropped from 110 down to the $40 level. So that's what brought the Canadian dollar down so much. Why the American dollar is strong, it's because all other currencies are weak at this point. That's why it's so important to own diamonds. Every year they have the Diamond and Watch Show in Basel, Switzerland. And every year it's been a really big event, and I've gone to it many, many times and, found some beautiful pieces there. This year, nobody went. Why? Because the Swiss franc went up by 30% in one day, if you remember, about a month ago. Instead of supporting the euro at 120, the Swiss government decided to shock everybody and sell off the euro and buy heavily the Swiss franc. They also went to 0.75% of negative equity in bank accounts. So what Switzerland did, I thought, was very stupid. Now they're seeing the results of that. Because the bottom line is that everyone that went to Switzerland to look at diamonds and watches realized that the prices were 30% higher because of the 30% increase in the Swiss franc. And what happened is there was no business done. It wasn't that people didn't want to buy diamonds and didn't want to buy these magnificent watches. They were just too expensive because they raised their currency by 30%. That's why owning diamonds is so important, because they can be sold in other currencies. We have diamonds priced in U.S. dollars. So our clients that bought diamonds back several years ago when the currencies were much lower made a fortune just on the currency alone. The next 5 to 10 years are going to be the telltale sign. That's when we anticipate making fortunes in the diamond business. Number one, with Argyle Pinks, because we know the mine is going to close. And number two, as we reported last week, there's less than a 20-year supply of diamonds and gold in diamond mines. That's going to wreak havoc on both of those markets, and those are both markets that we're bringing to you physically. You know that you're going to be able to buy physical gold from us with no commissions at spot price within the next 30 days or less, and we have the most beautiful diamonds and the only way to resell them. And again, those are the areas where most of the money is going to be made, in gold and diamonds, and that's what we've been professing to you for the last 10 years.
You look at 5 compelling reasons to invest in diamonds: privacy, portability, estate planning, price stability, and good long-term growth. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. That's 1-800-432-1022. Our featured diamond of the week is a 1.19 carat cushion cut, fancy, vivid, orange, yellow, internally flawless. Go to rarecoloreddiamonds.com, click on featured diamond of the week. You can see it there. In fact, if you'd like to get our free weekly newsletter, it's in our newsletter. Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com. And we do have the auction results from the sale earlier this week, and you can check those out. We'll be happy to send them to you. Sotheby's Magnificent Jewels and Jadeite sale. And let's go through a few more auction results to give you an idea. Lot 1613, a pair of fancy, intense yellow diamond and diamond ear clips. The estimate on it, $15,000. It sold for $27,000. And I know a lot of people have invested in diamonds in that price range. So you can see what those diamonds are doing. As Harold and I have pointed out in the past, the big diamonds, the $1 million diamonds or more, they do well at auction. But it seems the smaller diamonds, the ones that are priced at a lower level, seem to be doing even better. Lot 1649, a fancy light brownish yellow diamond and diamond ring. The estimate on it, $25,000. It sold for $41,000. Lot 1835, fancy vivid yellow diamond and diamond ring. Estimate $51,000, sold for $72,000. 1641, a fancy yellow diamond and diamond ring. The estimate on it, $64,000. Lot sold for $80,000. Lot 1855, It was a light pink diamond and diamond ring, and the estimate on it, $70,000, sold for $93,000. Lot 1833, a fancy yellowish green diamond and diamond ring, estimate on it $45,000, sold for almost $100,000. You get an idea of what is the potential when these auctions are held and these diamonds are sold. And we have another auction coming up on April the 21st. We will keep you apprised of what happens there. There's a big, and this is a white diamond now, internally flawless, that would be one of the diamonds that Harold has recommended in the past, the Triple X. And it's 100 carats, and it will be up for auction, and we will let you know how that does in the weeks to come. But, Harold, we really encourage people to get the list of the auction results this week. Get our free weekly newsletter. Go to rarecoloreddiamonds.com, 1-800-432-1022, and take a look at our future diamond, because if you're looking to start your own diamond portfolio, this would be a great starter diamond. You're looking at 1.19 carats, and everyone loves a diamond that has such vivid and bright color. And this one does. It's a cushion-cut, fancy, vivid, orange, yellow, internally flawless. And the thing that you do, Harold, and I agree with you, if you actually go through the auction results, a lot of the diamonds are not of the quality that you actually have our investors investing in. They're of a lower quality, and they're still selling well at auction. But you offer the best of the best when it comes to investing in diamonds. We're talking about internally flawless.
Yes, you're 100% right, Randy. Again, most diamonds are not investment quality, so that's extremely important that we understand that right from the word go. And even though a diamond is colored doesn't mean that it's investment quality. For example, black diamonds are not investment quality. Brown diamonds are not investment quality in most cases. Now, there are some brown diamonds that are exceptional. There's no doubt about that. But, again, it's important to understand that certain diamonds have track records. Yellow flawless diamonds. Back in 1980, you could have bought a 1-carat yellow flawless for $500. Today, they're over $20,000. Again, they're known as a longer-term investment, and that's what we profess. Buy them for the longer term, put them into a ring or a beautiful piece of jewelry and enjoy them, or simply put them into your safety deposit box and hold on to them. But there's no doubt that these diamonds go up more than almost any other asset, and the closer we get to the Argyle mine closing down, that's a no-brainer. This is an opportunity that will never, ever happen again, because there's no mine in existence that does what the Argyle mine does. And they produce 95% of the pink diamonds in the world. They're going up more than any other asset does, and soon there will be no more of them. So, again, once that mine is closed, this deal is over. And, again, it's something that if you didn't invest in it, it's something that you will regret for the rest of your life. This is something that, again, will never, ever happen again. So we're also looking at green diamonds. Green diamonds are extremely rare. They're starting to become very, very popular. We probably cut, I'd say, 70% of the green diamonds in the world. We have our own diamond mines in South America. And again, these diamonds are also going up tremendously. So please give us a call. On our website, we have a historical price tracking system that will tell you what diamonds were 20, 30 years ago and how much they are now. We will also be able to show you our free online seminars, our learning seminars, and all that. So go to our website, educate yourself, because to us, an educated client is the type of client that we need to deal with, because, again, this is something that is not for everybody. First of all, our diamonds start at about $20,000, and most people don't have that kind of money, believe it or not. In the United States, 75% of the people have less than $10,000 to their name. That's how difficult things are in the United States, which, again, is another reason why you want to own an asset like a diamond.
One of the things that happened during the week as well, Lauren Bacall, her estate fetched $3.6 million at Bonhams. And that was in New York. They had a sale there. And you may remember back in November, Rachel Bunny Lambert, Mellon, and her estate went for $218.1 million. And a good chunk of that went to charity. So you can see how these are not only heirlooms, museum pieces, but they can do well for families in the future. Lauren Bacall, her children were going to be the beneficiaries of the sale. When it came to Rachel Bunny Lambert Mellon's estate, a good chunk of it, as I mentioned, went to charities around the world. One of the quotes from and I think it's very important, one of the quotes from the press release that was sent out, Rare Colored Diamonds selling the Argyle pink diamond necklace and ring valued at $890,000. In there, it's interesting to note that Harold's partner, Jose, said that these are extremely rare and important pieces. The necklace alone took 15 years to create. It's very special. And I think that's one of the things, Harold, that we can't stress enough, is that when you're dealing with rarecoloreddiamonds.com, you're dealing with the best of the best, and you're dealing with museum pieces, heirloom-type pieces that have obviously been around. And it's something where and we joke about this all the time, you walk in a room. If you walked in the room with a bond certificate or a stock certificate, people would laugh at you. I challenge people to do that. Go into a room with a bond certificate or a stock certificate on. People are like, what the, But if you walk in with a diamond from rarecoloreddiamonds.com, like a Argyle pink diamond necklace and ring valued at close to $900,000. You're going to have a different impression made of you, not only you, but you're going to be the star of the show. It's wealth, and obviously it's something that you can wear at the same time, and something that can be passed down from generation to generation, or somewhere down the line, as we have heard mentioned with Lauren Bacall and Bunny, that maybe at auction, when you pass, it's obviously money that can be raised for your family or different charities. So there's, Harold, with about 2 minutes left, lots of options available to people when it comes to investing in diamonds.
Oh, you bet. In fact, the necklace reminds me a lot of the bracelet that I saw maybe 7 or 8 years ago when it was offered for $1 million. It was an Argyle pink diamond bracelet. And that bracelet 7 years ago, they wanted $1 million for. It showed up in England last year for the Argyle tender, and they displayed it at $10 million. This necklace, I believe my client will make similar returns. I believe he'll make 1,000% return on his money over the next 10 years with this necklace. It could never be duplicated. So again, these are the type of assets that we bring to you. We have the last 8 pieces of Elizabeth Taylor's estate. Some of her pieces sell for 10 times what the estimated value are when they go to auction. So these are the type of assets that we bring you. Portable private wealth that you could wear, you can hold on to, that never decline in value because there's hardly any of them available. And again, some of these very, very rare pieces could absolutely make your retirement for you. 10 years from now, you could see 500 to 1,000% return on these vivid pink Argyle diamonds and diamonds like that. And that's where we suggest our clients put their money.
Well, you look at the top story today, Swiss government becoming the first ever to issue a 10-year debt at a negative yield. You also have bank deposits no longer being guaranteed by the Austrian government. That's something that they're going to put in place. And Harold, with about 30 seconds left, when I hear those stories, I say to myself, well, why wouldn't somebody have that insurance policy in their portfolio of hard assets, like our featured diamond, a 1.19 carat cushion cut, fancy vivid orange, yellow, internally flawless? Don't sit for 10 years getting a negative yield. Have a rare colored diamond.
You said it exactly right, Randy, and that's exactly what I would also suggest, because just a phenomenal asset in combination with other assets. We're just very conservative here. We don't take risks. And again, I think that diamonds are one of the best investments you could make.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
You can speak personally and privately with Harold at 1-800-432-1022. He'll be happy to speak to you about investing in hard assets, diamonds, gold, and silver. RareColoredDiamonds.com is the website. You can also take a look at Harold's auction site, HSFineAuctions.com. And obviously, one of the big stories of the week, RareColoredDiamonds.com selling an Argyle pink diamond necklace and ring valued at close to $900,000. And we congratulate Harold and RareColoredDiamonds.com. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.